This video is titled 6 Trillion Lies, and here's why.
So the total package here comes to roughly $6 trillion, $2 trillion direct assistance, roughly $4 trillion in Federal Reserve lending power. Again, it'll be the largest Main Street financial package in the history of the United States. Liquidity and cash for families, small business, individuals, unemployed, to keep this thing going. We're heading for a rough period, but it's only going to be weeks, we think. Weeks, months, not going to be years, that's for sure. And hopefully pave the way for continued economic recovery.
So, there's a couple of lies there. One of them, he said that it was a package for Main Street. Yes, there's $2 trillion of it that's going to be mailed directly. I mean, people are going to start getting checks in the mail. That's going to the public. The other $4 trillion is for business. And he talked about small business. But do you think they're going to what do you think? Do you think they're going to let the S&P 500 companies fail? And that's what would happen if we don't bail them out also. So the majority of that $4 trillion is going to be directed toward all of the biggest companies on the planet. And yes, small businesses will be able to get loans too, but most of the things like dry cleaners and restaurants and things, a lot of these places are going to go under. They're going to hurt. The world is going to be a little bit different after this thing, maybe a whole lot different. The other lie in there was that this would take just weeks or months at the most. Well, you know what? 6 months is a minimum, 18 months, possibly even longer is a maximum. Take a look at what happened with the Spanish flu. That took like 18 months for that thing to burn itself out. And so it all depends on if we can develop a vaccine, but those things usually take a year or so to do. So, we're spending a lot of currency on this, but the other portion of the 6 trillion lies here is that this already sits. They already did a package for the coronavirus that was 800 and some billion dollars. And we were already doing more than $1 trillion deficit spending. So that package took it up above $2 trillion. So this takes the deficit spending up above $8 trillion already, and it hasn't stopped. This is going to go on. It isn't 6 trillion. It isn't even going to stop at 60 trillion. We're at the end of a debt super cycle right now, and along with it, a shift in world monetary system. They call it a monetary reset. I've been giving lectures on it since 2009. I could see the shift in the world monetary system coming way back then, and I called it the death of the dollar standard, but everybody's calling it a monetary reset. But basically, when you say, you get $1 trillion, you get $1 trillion, you get $4 trillion, bah, then, basically it's all over with for the currency at that point. Let's say that the economy is like an onion. Now, I'm not going to really talk about layers, but let's say you put that onion on a cutting board and you cut it up and you get more and more and more pieces. There's a lot of pieces of onion on your cutting board now, and you keep on cutting it finer and finer. Is there more onion? Or are there just more pieces of the onion? The economy, the wealth that we have, is all of the goods and services that we produce for one another. The currency is not the wealth, and we've got a bunch of Keynesians running the global monetary system that believe that the currency is the wealth. And they're just cutting the currency up, the currency supply, into smaller and smaller and smaller pieces. And what this does is it pushes some sectors into bubbles and warps the economy at the expense of the other portions of the economy. Those other sectors have to be stolen from. So some people are enriched at the expense of the other people that they are going to impoverish. That is just the way economics works. This is fundamental economics. And the global central bankers do not understand these things. It just amazes me that they don't understand these. So working from the bottom here, these are the stories. White House pitches $6 trillion stimulus package. And then virus-related stimulus could exceed $10 trillion, sources say. And then here the package, the Senate agreed on it, so it's passed, and that's what you just saw. Up next is On the Radar. And Jim Rickards writes, there's a media narrative somehow that FDR nationalized the economy to win World War II. Untrue. Ford made tanks, Boeing made bombers, Kaiser made ships. Americans grew food in victory gardens. FDR practically invented public-private partnerships, the same model Trump is using. Absolutely true. FDR, though, people should read Milton Friedman's Monetary History of the United States from 1867 to 1960. The vast majority of the book, maybe half of it, is about the Great Depression. And it's a lot of it, and read Murray Rothbard's America's Great Depression. Because when you read those two books, you do come away with the conclusion that FDR took what should have been the worst recession that we had ever had and turned it into the Great Depression and a lost decade. And I can't really go into all of the aspects that caused that right now. That is for a different video. But this is another person saying the price of a gold coin is the real price of gold is like saying a bag of potato chips is the real price of potatoes. So if the spot price is the real price of gold, try and buy some at that price. And so Chris Martinson comes back and says, hey, look, the price of paper gold is falling right now, just $16.28 an ounce. The catch, you can't actually source any at that price. A real market would see the price rise until some supply showed up, but not this fraudulent show that's being run by the Chicago Mercantile Exchange, the Commodities and Futures Trading Commission, and the COMEX Commodities Exchange. Thank you very much, Chris. You nailed that one right on the head. Chart of the day. And actually, this is charts of the day. So Lance Roberts says the market has been unable to string 2 up days in a row since the crisis started. Today might be the first and mark the start of a bear market rally. Don't forget to sell on the way up. And this chart shows the volatility of the market, and so it's the daily percentage change. And what you see here is that this is the biggest since going all the way back into like 1929, 1930, biggest up days. The biggest down day, it's the second biggest down day since the crash of 87, except if I'm sure if you took a week or a month instead of the daily change, this would actually be larger than 87. 87 was the largest one-day crash in history. So checking in with the Federal Reserve just to see what's going on here. The assets. So this is total assets. Now, the Fed has a balance sheet, and the balance sheet must balance. To acquire an asset, they have to create currency. To create currency, they have to acquire an asset. That's part of their balance sheet. And this is the Wednesday level. But the thing is here, this is last Wednesday. They haven't compiled the data or released it yet for today. So as of last Wednesday, they were at 4.7 trillion. So right up here, we'll see where we're taken next week. We'll check in again sometime soon. Now you can break down those total assets into a couple of main sectors, and then there's some other smaller sectors, but all of the different treasuries. So this is notes, bills, and bonds. And again, the Wednesday level, so it's from last Wednesday, not today. It's actually much higher than this, but it's 2.5 trillion. Now, this is part of our national debt that they buy. They create currency and they buy up part of our national debt. You and I have to work in the future and pay taxes to pay the principal and interest on these treasury bonds, bills, and notes that they bought with currency they counterfeited from nothing. Another portion of it is mortgage-backed securities. Again, this is from last week. Next week, you are going to see an uptick in this because they did start up this program again. And it is currently at $1.37 trillion, making the Federal Reserve the largest owner of real estate on earth. Think about this. They're holding mortgage-backed securities, And so they are basically the lien holder on, most likely, if you've got a mortgage, your home. 1.37 trillion. Now, I went to Zillow, and they say that the single-family median price home in the United States is 247,000, I think. Other places say that it's 273,000. Most of these homes that are in these mortgage-backed securities are not the multi-million-dollar homes. These are, they packaged them up with a bunch of junk, and so riskier loans tend to be homes that are on the low side. So let's just pick 250,000 and divide 1.37 trillion, divide by 250,000, and you end up with almost 5.5 million homes that the Federal Reserve has the lien on. Is this immoral or is this immoral? Now, the mortgage payment that you're making and all of the interest, if you borrow $100,000 to buy a house, you're going to pay $200,000 over a 30-year period. So this is, and they get to do this by creating currency, by counterfeiting it into existence. Another portion of the balance sheet is repurchase agreements, where the Fed makes a deal with some financial entity. You pledge a bond or a note or a bill, and we will do an overnight loan or a 1-month loan or a 3-month loan or a 1-year loan. Most of them are overnight. And we agree on a date, and then you're going to take a haircut, which is the equivalent of interest, for the cash that I'm going to whip up out of thin air. I didn't actually have that cash. I'm just going to create it, give it to you, and then you agree to buy that bond back and pay more for it than I bought it from you, even though I got to whip up the cash for free. And that's $442 billion. But what I want to point out here is this is the dot-bomb crash, the dot-com tech bubble crash, dot-bomb I call it. And that's up at $120 billion. And then the terrorist attacks, 9/11, that's at about $75 billion. And then the global financial crisis is just over $120 million. And this is when the entire world economy almost melted down and froze up. And then they turned this thing off completely for more than a decade. And this just shows you that the Fed is taking a wild-ass guess at this thing. They're educated people. They're Keynesians. So I guess they're swagging it. It's a scientific wild-ass guess. But look at what has happened recently, and we're up at $442 billion on this thing. And so it shows you the scale of what's going on. And again, this data is a week old, and it's already way over this. And this is going to go right off the top of your computer screen. I want to welcome the 1,909 new subscribers. There was a Beatles tune. My baby says she's traveling on the one after 909. Doodle-doo-doo-doo-doo-doo-doo. So, sorry about that. So thank you very much for subscribing. This is really important to us. It helps our channel, and it just helps me get the message out and get people prepared for what is coming, because this is huge. Don't forget to click the notification bell. Viewer feedback. My friend showed me Hidden Secrets of Money while we were in Afghanistan in 2017. I ordered my first 5-ounce bars back then. Thank you for everything. No, thank you for protecting yourself. The best way that we're going to get through this is to have some of the middle class survive, and that has been like my mission. The reason that we've done this is to try and a country is defined by its middle class. And if you look at the way Hitler took over Germany, it was by having a scared middle class that would vote for some very strong leader. This is where Napoleon came from. It's where Hitler came from. And this is something that we have to be very mindful of. And the more people that survive this thing without getting impoverished, the less likely we are to collectively lose our heads. Lose our minds, not our heads. Hopefully this isn't going to go to revolutionary France. Mike, big thank you. Big thank you to you and your great team. Those everyday updates mean a lot to me as they allow me to get prepared in various ways. First of all, psychologically, as I can be able to see what's coming and thus be less afraid of the unknown. Secondly, it's really impressive to see how great the free market can be. Third, it's astonishing how accurately you've described everything that is coming. However, I regret being so risk-averse in the past because as a student, I thought it would not be wise to waste my currency in order to invest in precious metals, and now it hurts that the spot prices have started their way up. You know what? Yes, they've started their way up, but the spot price is lagging way behind the real physical price, and you haven't seen anything yet. So I would still, I don't give advice, but if I were you, I would still consider investing in PMs simply because all of the mines are going to be shut down due to coronavirus. If they send a bunch of guys down in this hole, they're all going to get sick, and they're going to be shut down anyway. And so if they don't send them, then they don't get sick. But either way, they're going to be closed for months. There's going to be no new supply of precious metals for month after month. And it's at a time when everybody wants it. And then the 60% of the supply of silver comes as a byproduct from mining copper, lead, and zinc. And they're not going to be building a whole bunch of new homes in China to use a bunch of copper wire and plumbing. They're not going to be building a whole bunch of new cars to use lead batteries and zinc castings. So you can still get ready and you can still protect yourself at these prices. I just think that at this point, gold under eventually $10,000 an ounce is absolutely insane thinking, and it all depends on how much currency they create. It's refreshing to hear someone use the word immoral when discussing banking and financing. Thank you very much. It's not just immoral, it's immoral because it is fraud, it's theft, and it is enslavement. The central banking is enslavement. If they create currency to buy a bond, and we have to work in the future to pay the principal and interest on that bond, they have enslaved us, and they did it through counterfeiting. Where I live, they say real estate can never go down. We'll just see about that. This is really funny to me because when I started, I was touring the world with Robert Kiyosaki, the real estate guru of gurus. And I traveled the world with him speaking to audiences. One of them had 30,000 people in the Los Angeles Convention Center, a huge audience. But I talked to thousands of people in 2006 and 2007, and they go, real estate never goes down. And I was just thinking, well, we'll just see about that. So at age 65, I've seen much and have been my own bank for years after someone suggested your website years ago. I remember when silver was in the coinage and when Nixon took the U.S. off the gold standard. The crazy inflation that has followed, more like legalized theft. Thank you very much. That's absolutely true. Just hold an apple or orange. They've not changed in my lifetime or even 100 years, but the cost has. You know what? Coincidentally, it's just a little over 100 years ago that the Fed went into business. It was November of 1914 that they opened their doors for business. It was passed in 1913. And so the cost of that orange and apple, that is the reason that cost has changed. It's because the currency stores less and less and less value, less purchasing power. So when you work for it or when you sell something, it requires a whole lot more units. And then when you buy something, if there was any inflation in the meantime, it requires even more units. So they're just cutting that onion up into smaller and smaller pieces. Thanks, Mike, for the videos you've done helping those who can think. And I like to think that I have a thinking audience. So thank you very much. I want to remind everybody to download my book. It's free, and send it to everybody that you care about. It's a PDF. Just email it to them. I don't care. Well, I do care. I want you to protect as many people as possible. There's something coming, and the country will change, the world will change, and it will change. It will be less bad if everybody is prepared in advance. The quote of the day: non-cooperation with evil is a sacred duty. Mahatma Gandhi. Thank you very much. If you got anything from this, please like it and share it with everybody you can. We need your help to spread the word.